Today, let's take a look at Parak Parekh Long Term Equity Fund. The fund was started in May 2013 by the late Parak Parekh. As he transitioned from a PMS to a mutual fund house, it was then called PPFAS Long Term Value Fund. After Parak Parekh's death, it was called the Parak Parekh Long Term Value Fund, and the SEBI mutual fund classifications came out. It reclassified itself as a multi-cap fund, which, in my opinion, was a very smart idea in terms of putting itself in that category, and it was renamed as Parak Parekh Long Term Equity Fund. Although why I call it as a smart idea is because although it uses value investing ideas and value investing principles, it could have called itself a value fund, but since that was their flagship fund, they preferred to call it as a multi-cap fund. In fact, I sometimes wonder if Quantum should have done it also with their long-term equity fund, call themselves as a multi-cap fund, have that freedom, but and remain a value kind of fund. So this fund has, even if you look at a casual glance, at any kind of fund portal, you should be able to immediately recognize that the fund has got a fantastic track record. There's no doubt about that. The problem I have with this fund is I think it's dependent too much on its fund manager Rajiv Thakur, and as I'm an NFO investor in the fund, and as this holds a very big chunk of my retirement equity portfolio, I worry too much about the fund manager risk. What if the fund manager moves out of the fund house or something else? I mean, we have had an instance of that because Parak Parekh died in a car accident in the USA on May 3rd, 2015. The car was driven by Rajiv Thakur, and at least for less than a day or so, there was some uncertainty whether he could get into legal trouble because of that and so on. But then, of course, that was not the case. But then that kind of risk is always there with a star active fund manager. And also, the law of averages sooner or later will hit anybody, and past star fund managers. I mean, today, if you go and tell a new mutual fund investor that Prashant Jain is a great fund manager, they will not agree. But that's if you go and talk to people in the 2005, 2000, even 2010, up to the early 2010s, they would have agreed with you. So these things change. So we don't know how long they will be able to keep up this fantastic performance. There's no doubt that they have performed extremely well. You can see the numbers, but this is the major worry that I have. So the fund has got freedom to invest across market cap and sectors. It will hold 65% equity at all times. It can even get into arbitrage, as we will see in the asset allocation history. It can hold cash up to 35%. It can invest 35% in international equity if it wants. It's benchmarked to Nifty 500. I don't think this kind of fund can be benchmarked for its kind of diverse strategy. And it's also a kind of a focused fund because it will hold only about 20-25 stocks. If the AUM increases, then they will probably increase it. So this is the asset allocation history of the fund. The blue is the domestic equity. The red is the international equity. The cash holding is in orange, and then you have the arbitrage sticking out, derivatives, etc. You can see that. You can click the full graph and see that. One problem that people have had with the AMC is its very high expense ratio for direct plans, and that's because of the PMS legacy. They transitioned the PMS investors to the direct plan, and therefore they charged a rather high 2% for the direct plan, and then it actually went up a little bit, and then it has gone down gradually over the last few years. Even today, 70% of the assets is in the direct plan for the fund, and only I think Quantum Long-Term Equity has this kind of a similar ratio. So I have in the article the trailing returns and also the SIP performance compared. In all durations, the fund has done well. The fund would have got a better return than the Nifty 500. So there's no problem about the performance. The fear that I have is how long will they be able to manage it? Because we have seen some excellent funds in the past. They've been able to manage great performance for years, maybe even decades, but eventually some sooner or later there'll be a problem. One thing I'm happy is that the AUM may not swell too much, because this is not I don't see the distributors pushing this heavily. Maybe a few individual distributors would do it, but since it's not related to a bank, you won't see that kind of AUM problem, for example, that you would see with Axis mid cap, small cap, blue chip, and so on. SBI small cap, that kind of bank associated AMCs are always going to face AUM issues. There is sudden jump in AUM, gradual increase in AUM is okay. So let's see how this fund performs. As of now, I continue to hold it, but with these kind of fears.